Hello and welcome to Morning Brief Market Sunrise. I'm Jared Blickery, live from Yahoo Finance in New York. It is Thursday, the 28th of August. Coming up on the show, the Nvidia earnings aftermath, what the data center numbers mean for the AI trade, and we're going to hear from CEO Jensen Huang on his China strategy. And then tariffs go global. Why? Protectionism headlines matter for prices and profits. And we're going to tell you about the AI stock that jumped 14% this morning. So grab your coffee and let's own the morning. Our big story is Nvidia. The AI chipmaker delivered a beat, but the surprise factor is fading, and that's why the stock is soft pre-market. Now, guidance lands around $54 billion, give or take a couple percent, enough to keep the cycle intact, not enough to keep the hype for the U.S. investors. And that's a tempo check. So does very good still lift the mega caps in the S&P 500, or is it a sell the news event at the open? And under the hood, the center of gravity is shifting from pure compute to the plumbing. And in a potential nod to President Trump, CEO Jensen Huang highlighted the need for American tech stack to lead the world, much as the US dollar leads global currencies. Meanwhile, networking surged as a ramp for Blackwell chips kicks in. It's a reminder that racks, switches, and software are grabbing a bigger slice of the AI pie. And if that holds, the benefit flows down the U.S. supply chain to server makers, Ethernet, and cloud CapEx. Even though day one reactions, they might be a little bit choppy today. China is the wild card. The outlook assumes no H20 sales into the mainland. Nvidia says it has licenses and is now looking for orders. Any shipments then would be to the upside, not the base case. That keeps geopolitics in play, but the core demand driver is still U.S. hyperscalers. And the bottom line is, this is what a maturing boom looks like. Expectations, they cool a bit, the order book still outruns supply, and the trade refocuses on execution. So let's take a moment now to hear from Ben Gagnon, the CEO of Bitfarms, on why the new chips that Nvidia is making for AI today might not be able to run in data centers that were built yesterday.
The reality is that the GB200s and the new chips that Nvidia is making for AI today really cannot be run in the data centers that were built yesterday. These are completely new kinds of compute technologies with very, very intense heating and cooling requirements. And so it requires something called liquid cooling, and really most data centers don't have that. When you're looking at kind of how the growth of the industry is going to be happening over the next couple of quarters and years, just the amount of racks that Blackwell is supposed to be shipping by Q4 is supposed to double from Q2 to Q4. And that's going to be roughly something like, a few gigawatts a year, and forecasting for it in 2026, we're looking at 6 to 8 gigawatts just on the Nvidia Blackwells, not including the traditional HPC, the data storage, and all the other products by AMD and others. So big energy markets like Pennsylvania, which powered the Industrial Revolution, are really now coming into the forefront as we're looking at this AI industrial revolution. And it's really coming back into full swing here. That's why I think you've seen a lot of companies making investments and committing to Pennsylvania. And it's something that Bitfarms has done in a big way. We've got about a gigawatt of power there in the state to build out and develop over the coming years. And we're hoping to capture a really significant market share of this HPC and AI infrastructure.
And here are the three things you need to know this morning before the bell rings on Wall Street. First up, the Chinese Nvidia competitor you've probably never heard of, Cambricon, just posted a record profit after Chinese leaders are pushing a buy local AI chip drive. Its stock is surging, as you can see they're up 15%, but the US takeaway is straightforward. China will fill more of its own AI orders, so any Nvidia or AMD sales in China are a bonus, not the plan. The real demand engine for this trade is still US cloud giants and the American supply chain that feeds them. Next up, Mexico is taking a page from the Trump playbook, planning to raise tariffs on Chinese imports like cars, clothing, and plastics. The rub for U.S. consumers, if those U.S. goods cost more, some of that can show up in the U.S. prices, and companies that make or source in Mexico, they may rework supply lines. Watch car pricing, big box inventories, and which brands shift production closer to home. Finally, in a reversal from the global financial crisis, French 10-year bond yields are creeping up and are now nearing Italy's. Two near-term catalysts, a confidence vote in Paris and a debt rating check, they could keep pressure on French bonds. Now for U.S. investors, when Europe pays more to borrow, long rates, they tend to drift up globally. And they've already pressured U.S. stocks twice this year. Let's hear now from Drew Pettit on investment opportunities outside of AI.
Starting to see earnings growth inflect. For the next year, you should see earnings growth of almost 10%, but we don't have a lot of confidence in that actually being true because we've seen a lot of earnings downgrades for value as a whole. For fintech and wearable tech, we expect these to grow between kind of high single digits in the low teens, but the difference here is the revisions have actually been really stable. You haven't seen a lot of cuts to 2026 numbers. So you should see premium growth to the other half or the value side of the index, but again, not fully priced in.
Any specific names you'd highlight for us, Drew?
Yeah, it's funny. On fintech, we go back to some old school names that are kind of market leaders in integrating. So Capital One Financial, who just bought Discover Cards and so on, BlackRock, Charles Schwab, and then even someone who's tied to the mortgage market, Equifax, for example. I think those are really interesting fintech names, maybe not as techy as interesting as people think, but offer really good value, and our analysts have pretty strong conviction. On the wearable tech side, Boston Scientific and Medtronic, two different stories. Medtronic, more of a turnaround. Boston Scientific, basically the best in the space, if you ask our analysts.
And I know this is a non-AI discussion, Drew, but in this report, did I see that, did you add Nvidia to your AI at a reasonable price basket?
It was in there before, and this is kind of the interesting story when you think about Nvidia tonight. It's not really about where the stock is priced or what's going on in the quarter. It's about the out years. And this is a stock, even though it keeps moving higher, the out year estimates for 2026, 2027 keep moving higher. So to us, we thought it was a really good time to add this to our portfolio because it hasn't been there this year.
Drew, finally, I was talking to a strategist on the show today, longtime market watcher like yourself, and I asked him, what is more important to the market now? I said, Drew, is it the Fed or is it the great AI trade and trend? He said the latter, but what do you think, Drew?
It's funny, if I had to pick between the two, I might agree and say the latter. But to us, it's the fundamentals and what AI and tech development and innovation means for company fundamentals. It's not just the tech companies that can benefit from this. We see AI permeating a lot of different industries, and it should show up in better margins, better productivity, better sales and earnings per employee. All of those enhancements really make the S&P 500 a structural winner. So yeah, between the two, I would pick AI and tech innovation as well.
Stick around to hear from Nvidia CEO Jensen Huang and be the first to know about today's trending tickers. We're going to be right back. Welcome back to Market Sunrise. It's a big moment for markets as Nvidia reported earnings, and we are bringing you unparalleled coverage here on Yahoo Finance. Jensen Huang, the CEO of the world's largest company, joined us for an interview yesterday. Here's what he had to say about his relationship with President Donald Trump and Nvidia's strategy in China.
President Trump really understands and really wants, and it's his policy, to have America win the AI race. And that's really foundational. Recognizing that that's important for national security, it's important for our economic security, it's important for American leadership around the world. And he understands that the American tech stack should be the world standard. Just as the American dollar is the world standard that economies are built on, we want the American tech stack for the world's technology and industries to be built on. And that includes China. And so if you look at China, China has 50% of the AI researchers in the world. They have lots and lots of AI companies, and they have lots of AI chip companies. Without us there, they will obviously have their own alternatives, and they've been growing. And you've seen some of the AI chip companies have record years. Their stock price is at record high. Obviously, there's a lot of opportunities there. If we have an opportunity to go compete for that market, it would be great for America. It would be great for China. And we have an opportunity to go capture some of that $50 billion that is growing at about 50% every year. The second largest AI and computing market in the world. America should be part of that. It's great for exports. It's great for our treasury. It's great for American technology leadership. And it enables us to leverage that leadership all around the world. And so really important it's just an incredible decision by President Trump. I'm very, very pleased with it, very grateful for his decision. And we're gonna do our best to go capture some of that market.
And talk to me about what it means for Nvidia specifically, Jensen, because, even at full strength, China was about, call it 10 to 15% of the company's sales. And so I'm curious if you think of China as a nice to have or a need to have for Nvidia, and whether you need sales into China to keep up the pace of rapid growth that you've been experiencing.
Every American technology company, for every American technology company, China is important to have. It's an important market. It's dynamic. The companies there are vibrant, innovative, fast-moving. That's one of the fastest growing technology markets in the world. The technologies that are used there, the services that are created there, the open source models. China builds most of the world's open source models today. And DeepSeek, of course, we've spoken about before, really important model. Q1 from Alibaba, really excellent. Kimi is excellent. Moonshot's model is excellent. There's a whole bunch of really excellent models. Another one just came out, a Seed from ByteDance, really excellent. And so the open source culture is really vibrant there. Those open source models has spread all over the world. They're used by startups all over the world, including here in the United States. It's used in enterprises all over the world. Open source models is making it possible for people to create market-specific, domain-specific, and company-specific models. Really important for American technology companies to be able to run those models really well. And so I think China is just an important market. It's also, as you know, it's just really large. It's the second largest computing market in the world. I'm just delighted that President Trump sees the wisdom of American leadership, and particularly at this time where AI is taking off. It's vital that America wins the AI race.
And so, Jensen, what now needs to happen, right, to get you there, to get not just you there, but other American companies there? How do you overcome that sort of political hurdle?
Well, for a while, these American AI technologies are stuck in limbo, and so now we're getting the engine fired back up again. And so I'm looking forward to, and I hope that the China market and the Chinese government will allow American technology companies to be able to sell to the Chinese customers. There's a lot of demand there, although there's a lot of alternatives there. The China AI technology companies are really good, as I mentioned. We can be very competitive. You're talking about America's technology industry. It is our national treasure. It is incredibly competitive, and we have every opportunity to succeed in China market if they would allow for American technology companies to be able to play there. And so I'm hoping that things will get sorted out. I believe there's a lot of demand for H20. The CUDA ecosystem is really vibrant in China. We've been there for a very long time, and so we can add a lot of value if we can get back in. And so, anyways, we've now taken care of we've now been approved and licensed to be able to ship to China. Now we're looking for orders in China, and I'm hoping for it. If it doesn't happen, of course, we've already guided to another record quarter next quarter, and the China business would be a bonus on top of that. But hopefully we'll be able to address that 50 billion, growing very fast AI market long term. Really important for the United States.
When that man speaks, the markets have to listen. We're going to be checking in on the global reaction to Nvidia's earnings all day on Yahoo Finance. And it's time for another quick break, but stay tuned for our trending stock segment. We're going to be right back. Welcome back. Breaking news now. We have earnings just in from some retailers. First up, Best Buy has had a good run in the past month as there has been some positive sentiment among investors in the specialty retail segment. Now in its earnings posted this morning, Best Buy maintains full year comparable sales forecast for the year 2026. In second quarter results, and let's also see how investors are reacting right now. You can see on your screen down about 1.43%. And here are some of the specific numbers. Adjusted EPS came in at $1.28 versus $1.34 last year. The estimate was for lower, $1.21. And then enterprise comparable sales, key number here, up 1.6% versus last year's down 2.3%. We're going to keep covering Best Buy today, but now on to Dollar General. Dollar General reported earnings per share that beat the average analyst estimate, according to Bloomberg. EPS came in at $1.86 versus lower estimates of $1.56. Net sales are also slightly higher than expected at $10.7 billion versus the estimate of $10.67 billion. And then operating profit, that's also slightly above expectation. So you can see now on your screen the stock is up almost 6% in the pre-market. Overall, what you need to know is that the company is raising its financial expectations for the year, primarily to reflect its outperformance in the second quarter. And despite current uncertainty, it is also seeing improved outlook for the second half of the year. And now on to another tech stock that's been in the spotlight lately, CrowdStrike. Shares in CrowdStrike fell nearly 8% in pre-market trading on Thursday, and it's now looking to be down a little bit after the cybersecurity company's third quarter guidance disappointed. In results released on Wednesday, CrowdStrike said it expected current quarter revenue to be between $1.21 and $1.22 billion versus analysts' average estimate of $1.23 billion. So what's weighing on CrowdStrike's revenue? Generous customer retention incentives, they are one thing to note, on top of other factors like continuing impact from an IT outage last year. However, the company also struck some wins. Revenue for the second quarter was up 21% year on year, and the bottom line for investors is, even with some strong numbers, the weak outlook sent the cybersecurity specialist into a tailspin this morning. Next up, another tech stock, but this one abundantly in the green. Snowflake jumped more than 14% in pre-market trading after the cloud-based data platform raised its annual revenue forecast for product. And it surprised investors with a strong beat on earnings per share. That's 38 cents EPS versus 27 expected. It also posted a 32% increase in revenue. Snowflake said it now expected product revenue for the full year 2026 to come in nearly $4.4 billion, which would represent 27% growth year over year. So what's driving such strong growth? You guessed it. Booming AI demand and specifically enterprise infrastructure. Snowflake is definitely a bellwether of the AI momentum today, and it's up about 3% right now in the pre-market. Now let's take a break from AI to talk about a ticker that's been dominating the chatter in recent days. In case you missed it, Cracker Barrel has been at the center of a controversy over its logo. As many Americans, including President Trump, took to social media to criticize the restaurant chain's revamped minimal logo, eventually Cracker Barrel decided to reinstate its older logo, the one that includes a barrel and a gentleman. The viral controversy fueled a stock rally yesterday, and now some market watchers are starting to call it a meme stock. Ihart Duvanuski from S3 Partners spoke to Ali Canal here on Yahoo Finance.
It's hitting everything on both cylinders. It's hitting big long buyers who are actually selling. You got short sellers who are selling even more, driving the stock price down. Now it's going to be interesting. Now they kind of changed their tune. Are we going to see the long buyers jumping back in, short sellers covering because they made their money? So now you're going to see an outsized move up in the stock price because you've got this even long and short interest in the name. So watch out for names like that, like Open Door Technologies, Super Microcomputers, another one of those names where it's kind of like in that boxing ring where you don't know who's going to win and lose, but you're going to have some big results.
Now we are seeing one big strategic move in the crypto space, hitting the headlines this morning, and it involved President Trump's family. American Bitcoin is the name of a new crypto mining company backed by Eric Trump and Donald Jr., who are teaming up with mining giant Hut 8. Their plan is to take American Bitcoin public on the NASDAQ in September, and they would do so via a reverse merger with Griffin Digital Mining. The Trump sons and their partners are set to control 98% of the company, and this comes in an increasingly crypto-friendly regulatory climate here in the U.S., where several new legislations are set to support the growth of digital assets. The administration has even floated ideas such as a strategic Bitcoin reserve. Helped by favorable tailwinds, just in the last 6 months, Bitcoin is up about 35%, and Ether has more than doubled. Critics have been raising concerns about this unprecedented situation where a president and his immediate family are directly involved in an industry that Washington is supporting. And remember, Trump and his wife even launched their own cryptocurrencies, and family members have interest in multiple crypto ventures. Representatives for the Trump family have pushed back on criticism, and the family continues to grow in its activities in crypto. And if you're a bull, ABTC, the ticker for American Bitcoin, is one you're going to want to watch if and when it actually launches on the NASDAQ next month. Let's now get a final check on the markets here, and we can see the Nikkei over in Asia is down about 0.7% to 308.52. In the Hang Seng, that is down about 0.8% to 24,998. And in Korea, the Kospi is just over 3,000, up about 3%, or 0.3%, up 9.16. Also in Europe, we have the FTSE in London up about down about 0.4% to 92.18 and 29 cents. Meanwhile, in Paris, the CAC 40 is up about 2.42 points, just barely, about 3 basis points registering there. And in Germany, the DAX is down about 0.2%, just below 24,000. Then in the U.S., we have Dow futures up 54 points to 45,696. That is an increase of about 12 basis points from yesterday's close. The S&P 500 futures, those are down about 0.5%, or about 3.25 points to 6492.75. And the NASDAQ futures, we've been watching that one recently as it has been hovering near record highs. 23,592.25 is the index level. That's down about 15 basis points, or 36.5 points. There we have Bitcoin. That is up to about 113,000, just cracking that big psychological level. That's up good for 1.62%, and we're going to be tracking Bitcoin throughout the day. And that is time for Market Sunrise. Coming up later on Yahoo Finance, as the world's most valuable company beats Wall Street expectations, can Nvidia keep up its winning streak? Plus, could there be opportunity in uncertainty? We're going to be examining the best plays in the banking sector with expert David Ellison. He is a Hennessy Funds portfolio manager. And the world is watching in the U.S. That's U.S. Open, but one of the biggest winners is off the court, a signature cocktail that's bringing in millions of dollars. Those stories and more coming up. And coming up next, join Ali Canal ahead of the market open on Morning Brief. I'm Jared Blickery. Go own the morning.